It was February 3rd when Bessent said they're going to monetize the assets on the US
Hmm.
balance sheet. I appreciate
Yep.
that he even gave us a timeline on it, 12 months. That's now
Hmm.
5 months ago. You said that he was not talking about gold. He later came out and said that that's not what he was referring to. Any updated thoughts on what is going on and what they are actually planning? Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today we have part two of my interview with Tom Luongo. Yesterday, he talked about why he is expecting 50 basis point rate cut in July out of the Fed. And today he digs into what is actually going on behind the scenes. We heard Treasury Secretary Scott Bessent 5 months ago say that over the next 12 months, he is going to monetize the assets on the US balance sheet for the good of the American people. What does that actually mean? Well, here's what Tom had to say. You
I love your take.
mentioned the gold and silver that's come from London, and you also mentioned Scott Bessent, which,
Mhm.
first of all, most importantly, Tom, tell me that you've never watched Scott Bessent speak and you've never had this pop into your mind.
For no matter how silly the idea of having a queen might be to us,
I can't help myself. Every time he makes I'm not trying, maybe it's being critical, although he doesn't seem very comfortable often in front of the camera, especially for those people who saw Tucker Carlson ask him about gold. And at one point he was saying how his friend's grandmother traded her currency for bicycles. And Tucker says, how'd that work out? He's like, oh, great. And I'm thinking, the guy in charge of the reserve currency, did he just tell me to trade for bicycles now here? But what are they doing? When you were on last time, it was right. I guess it was in this year. It was this year because it was February 3rd when Bessent said they're going to monetize the assets on the US
Hmm.
balance sheet. I appreciate
Yep.
that he even gave us a timeline on it, 12 months. That's now
Hmm.
5 months ago. You said that he was not talking about gold. He later came out and said that that's not what he was referring to. Any updated thoughts on what is going on and what they are actually planning?
There's a couple of things here, right? This and just to circle back to make sure that we get the final answer on the 2% rule thing. Powell, we know from Daniel DiMartino Booth and her book Fed Up that Powell was one of the guys who was dead set against the 2% inflation rule at the time when Bernanke created it out of cloth. Okay, is Powell still that guy? I don't know, but I put it out there to remind people. I'll be honest with you. I would much prefer if we ran. Yeah, I know. I would much prefer that if we ran monetary policy like Singapore, where we targeted an exchange rate band and not an inflation band or not a labor market or any of that. I would like the Fed to get out of that role, and I think that's maybe something that we move towards in the future. Just saying, I'm hoping for it because what I see is that that the Trump administration is clearly trying to reform the Fed, and I don't know if we're going to go back to the pre-19 Banking Act of 1935 Fed. I don't know where we're headed with this, right? But something is changing. They do want to change the way the Fed interacts with the economy. They don't want as much centralized control by the Federal Reserve, but the Federal Reserve still has a role to play at our monetary and fiscal policy, but it's not the same thing. What I've been saying for a while and what I think is on the horizon, and I may be wrong about this, but I'm going to lay it out there for people to think about. Given the Genius Act, given stable coins and all of this stuff, that what they're planning on is that we have a form of domestic dollar that trades at one price and everything else that trades and offshore dollars that trade at a discount. What Vince Lanci and I like to call the ATM fee that everybody else has to pay to get access to dollars. Right? He and I talked about that on a podcast we did together, and I'm sure you've had Vince on to talk about this stuff in the past. Since then, but Vince and I have been on this kind of idea for a while now. So now let's bring gold back into it, and then the balance sheet and all the rest of it. Housing is, I still think, the key to all of this is housing. This is why Trump is so adamant about trying to get interest rates down, because what he wants to do is he wants to fix the housing prices relative to the wages that we're paying, that people are being paid, so that the younger generations get out of the, metaphorically speaking, out of their parents' basement and into homes, so that they can start families, so we can rebuild a real U.S. culture and community, and we have a country again, as opposed to the deracinated fucking mess that we have today. So I understand what they're trying to achieve. And I'll be honest with you, I don't even disagree with them at all. It's what I want to see. The question is, when you have men as powerful and as experienced as Donald Trump, Scott Bessent, Jerome Powell, all of whom are independently wealthy billionaires at the ends of their life, doing jobs that they didn't need to do. Powell didn't need to take it on a second term at all. Could have went back to private equity. Let Lael Brainerd take over at the Fed, set interest rates back to zero, and Powell would have made billions in that environment. That's a private equity freaking smorgasbord, feeding frenzy, right? He didn't do that. He stayed on. He became the most hated man in the world, other than Donald Trump and Vladimir Putin. Now you've got Scott Bessent, another guy, has no need at all to do the job that he's doing right now. So that argument that all the magatards like to make about how Trump is, is orange Jesus and is trying to save us from the evil communists, to save America, and he didn't have to do this, and he's taken ones for our sins, and all the rest of it. You can make that same argument about Bessent and Powell. Now, do you think those three men are going to get into a room together and not have some disagreements? Do you think they're not going to stick to their guns? Do you think they're not thinking about their legacies and this, that, and everything else? Of course they are. So, but they have their perspective, and they're doing what they think is. Remember, Powell works for the banks. Trump nominally works for the American people. Scott Bessent works for Trump, right? So the monetization thing, what they're trying to do, I think, between the relisting of Fannie and Freddie and bringing them out of conservatorship and professionalizing them, is one leg of this, where now we have the premier mortgage insurance companies in the world, and they are, like it or not, they make a load of money, and they've been competently run. You can imagine the amount of money they could make when competently run. Together, Fannie and Freddie are the 9th most profitable company in the world. They made almost $29 billion last year in just fees. And Obama was using them for years to fund Obamacare. And now we want to bring them out into the world and give them life again as real companies that pension and insurance funds can buy and pull a 5 to 7% dividend off of, because that's clearly the plan. If you haven't watched the Bill Ackman, and I don't like Ackman, but this particular thing that he did back in January, explaining why Fannie and Freddie relisting makes sense, he did this on his Twitter feed, and I'm sure it's in other places now, back in the end of January. And it's a very good presentation, and I think everybody should watch it. So Fannie and Freddie is one part of this, because you have them. Now you add in the revising of the supplemental leverage ratio, the SLR, and freeing up bank capital. We have all of our banks in the United States are holding something close to $5.5 trillion worth of excess reserves that they have to hold against their U.S. Treasury holdings, which makes no sense. Why are they holding excess capital against the risk-free asset in the Black-Scholes equation? This is Caitlin Long's point. It seems dumb. Maybe because it is. Maybe because it was created by our European partners and their quislings in Congress in order to disadvantage our banks against the sclerotic zombie banks of the European Union. You think maybe that's the case? You think maybe there's something to that old 12 banking clans that run old Europe that have been around for 1,000 freaking years? Think maybe there's something to that? I think there is. I'm predicate my entire friggin' like worldview on this idea. And I've been right. So at least in broad strokes. So now you want to now you get rid of the SLR, which opens up our banks. We got our main bankers, Jamie Dimon and Solomon, those guys are all screaming for this. It's not so that they can go out casinoing again in the investment banking side of the thing and playing the rehypothecation game and all that. They want to go back to net interest margin banking. That's what that's what the SLR has been doing. It's been strangling them to keep them from being able to make any money doing traditional free and net interest margin banking, which is what banks are supposed to do. They lend money at 6%, they lend money at 6%, give you 3%, and they take 3%. And they're supposed to be the guys who are doing the risk analysis of whether or not your business plan is any good. They haven't been doing that. They've been playing these games and they've been, playing all this financialization nonsense. So let's get back to that. Getting rid of the SLR is one thing. Ignore this whole cloth, doing away with the whole concept of the Basel III endgame, which was yet another 30% shackle on our banks to keep Europe competitive. Oh, fuck Europe. Like it's so very obvious that we're being literally like held down by Lilliputians. Okay, so while they're simultaneously trying to get us into multiple wars over in Europe, in Ukraine, and in the Middle East, and China over Taiwan, like it's all dumb. Like we see your game, dude. We see it off. Like that's what he's talking about. So we have those things, and we can get interest rates down, and we can get real growth. We can have wage growth. We have the AI deflationary trade that's happening. The white collar jobs in the United States are going to start disappearing like you wouldn't believe because of AI. These people who are making 200 grand a year as middle managers, and pushing paper around, soon they're going to be $120,000 a year jobs. And by the way, they have the 3-2 in suburbia with the white picket fence and the 2.5 kids and the two car payments. Got news for you. They can't afford that on 125 grand because they're levered to the tits. And they're your 750. They're your credit score 750 lenders or borrowers who are soon to be 650 or 600s. So yeah, I get why Trump is yelling at Powell, wanting to get interest rates down. But again, you've got to get it organically down. You got to have the world want to buy our treasuries. So what are they doing? They're telling everybody around the world who's got U.S. treasuries sitting in reserves, and they're saying, look, dudes, bring them into here to the United States. We'll convert them into a token, invest in the United States, and you can still pull your yield off of them. And then we get interest rates down, and then we'll buy out those QSIPs at lower rates, but you won't care because we can, you won't care because you're making 6% or 8% on the investment that you made here in the US. That's what they're trying to do. And so raise up, attenuate housing prices to keep them from falling, and grow your way out of it. And I'm sorry, but most of the Austrians who are out there complaining about who are talking about this, and I'll put David Stockman out there, I'll put them all out there. I think they're all nuts. It's clearly obvious that we can do this, and we have a regulatory environment written by our enemies, enforced by our traitors in Congress. And once that goes away, the world changes, and it literally becomes unrecognizable to what we've seen in the past. That's what I say. That's what I think they've got. I think that's what they're doing. And you've got a guy like Bessent who knows how to trade. Remember, I was on a podcast with did an episode of Sean Newman with Alex Craner and Martin Armstrong. We were just
I heard that one. That was a good call.
Yeah. And Sean just kind of hit record. We did that the day after Cornerstone when we were up there in Calgary. And we were just like, hey, man, Sean's like, I don't know, you want to do a podcast at 11 o'clock? Like, let me see if I can get Alex and Marty. I'm like, sure. I was downstairs having coffee, just chatting with people. We ran upstairs, did the thing. I saw my Oilers jersey on, for Christ's sake. Sean didn't have any cameras set up. And we just started talking. And in the middle of the chat, Sean just said, welcome to the podcast, and started to record. And what came out of that? What came out of that was that Marty was like, dude, I was on the other side of the trade against Bessent and Soros when they were attacking the pound. Like, if anybody knows how to trade this plumbing and use the Treasury Department as a weapon against the United States enemies, I want nobody other than Scott Bessent in that role, because he knows how to trade like that. The one problem we've had is we've had nothing but eggheads. And why do the Chinese run rings around us? Because they take their graduates that they're going to move into the PBOC and they send them over here to go trade bonds and commodities and gold and all sorts of other shit and stocks for 4 or 5 years, and then bring them home. And these guys all have trading experience. They all have real world experience. And we have that at the Treasury Department now. We got a private equity guy at the Fed. And for the last 4 years, 3.5 years, that Mr. Private Equity Powell, all his private equity friends can't seem to get him on the phone because he's refusing to cut interest rates, or first he raised interest rates, and they're all screaming. So, like, I think half of what we're seeing between Trump, Powell, and Bessent is kayfabe. And I think half of it is real. And that's why I think Powell's going to cut 50 basis points in June or in July. And if I'm wrong, I'm wrong. But that's what I see. And what I'm asking everybody to do is to go with me and see where the thesis is wrong. And if the thesis is wrong, show me where it's wrong. I'm not that. I don't say that as a challenge. I say that as a plea. I want to be. I'd like to be wrong about this stuff, or I like to believe that I've missed something. And maybe I'm sure I have. I'm sure I've missed 15 or 18 things that are happening. But that's what conversations are supposed to illuminate. That's why we do these freaking podcasts. That's why we talk to each other. That's why we do our own independent research, and we get back together and we talk it out. I'm like, I'm a crazy man, but only because, I care. If I didn't give a shit, I wouldn't do this for a living. I go play bad jazz, with a couple old guys and be done with it, and limp along until I die of a heart attack. Whatever. I'm not doing that. Everybody here has their part to play in this, and my part is to be the crazy guy who challenges everybody's shibboleths. Okay.
Well, I know what you mean, Tom, and I appreciate that about you, and I'd like to think it's a similar way where it's like you learn a lot, find the people who disagree with you, at least understand where they're coming from, and either you find out you've spotted a flaw in their model or you found one in yours, and I think that's what makes for good analysis. Tom, you did also mention earlier about you think that Bessent, and I've heard this view, I've wondered, I don't know, but that Bessent and the U.S. could have been involved in a lot of that gold and silver that came from London to the U.S. Is anything you could expand on that one?
I mean, I'm just cribbing off of stuff that I've seen people do their own analysis of. There's a guy, I can't remember the guy's name, who actually came up with it originally. I follow him now on Twitter. I can't remember his Twitter handle. He's talking about, that he thought Bessent was running a basis trade against the spot versus
Michael McNair.
Yeah, that guy. The whole Euro spot, playing the basis trade between the spot and forward Euro rates, and then using the profits off of that to buy gold and drain the LBMA. Now, that was a couple months ago. Is that still going on? I don't know. But the trend is still in place. And now we're, and I think back on something like I think back on chatting with Brent Johnson, and and Brent reminded me when he was on the podcast that, previous to a sovereign debt crisis, the currency that's about to implode goes up strong first, and then it implodes. Why? Because everybody's trying to get cash to do what they need to get cash. Well, the problem with Europe is they need both euros to pay salaries and dollars to deal with all of their carry trades. And you're seeing the euro rise rapidly. And, in order, and they're, people are buying euros and selling dollars, right, into that market. And at the same time, you're also seeing, like I said, you're seeing bond yields not move. And the currency pairs are screaming that someone is getting drained of dollars. And clearly at this point, it's Hong Kong and to a lesser extent, Singapore. And, when you look at the Hong Kong and Singapore dollar versus the Swiss franc, the pound, the euro, you see the same thing across the board, which is that they're all rising relative to the Hong Kong dollar, which is pegged. That means that the Hong Kong Monetary Authority has to sell treasuries, right, to buy dollars, to then sell dollars to buy Hong Kong dollars to defend the upper end of the peg, because the Hong Kong dollar keeps trying to weaken. That's what they're doing. And at some point, they're going to run out of reserves. Singapore may be in the same state. And I asked the question earlier, and I'll reiterate it: why does the Hong Kong dollar still exist as a source of cheap dollars on China's border for City of London to get access to dollars when they need it? And that's why it's pegged. And the Hong Kong Monetary Authority keeps the interest rate 25 basis points above the Fed, meaning there's a nice carry trade there. They're at 4.75. We're at 4.25 to 5.5. And right now, with the 30-day T-bill trading at below 4.25, another reason why Powell is going to cut rates in July, tells you that there's an easy 50 to 60 basis point trade you can make just, playing 30-day T-bills versus 30-day Hong Kong T-bills. Moreover, U.S. dollar HIBOR, which is Hong Kong LIBOR, got crushed to 0.5% in May and has been stuck there. Someone is selling dollars, U.S. dollars, really cheap in Hong Kong. Desperate to. And again, this is where I will say, honestly, now I don't quite understand what's going on. Anybody who's interested in helping me figure this out, welcome to my Twitter feed. Like, I'm open to discussing all of this in greater detail. We need to figure out what's happening here, because what it feels to me is that someone is trying to run an operation to break the Hong Kong dollar peg and change that dynamic completely. That's what I see.
Yeah, and I might just add there that people can find you on Twitter at TFL1728. And we'll get to your website in a second. Although, last question for you here, Tom, and certainly appreciate your time, and we'll let you run in a moment. But I had asked you about this a couple of months ago. You gave me one of those like, "Hey kids, stop reading the Telegraph." So I would love to get any thoughts you have, because I've been seeing mostly from the Telegraph, although other places, talking about additional sanctions on Russia. Here, General Kellogg said Vladimir Putin had been warned that drastic new U.S. sanctions were ready to go. And then we did have they present a quote here from Trump. Makes me think maybe he doesn't want to stop the war and has to be dealt with differently through banking or secondary sanctions. So, Tom, again, this is why I'm asking you, because you're quite close to this. But it seems like something changed in recent months. We're a bit ways from the campaign where they're saying I could end it in a day. So take it away, please.
Okay, so those two articles, one was dated, I looked very carefully, one was dated April 26th, the other one was dated May 14th. Trump's already started cutting sanctions on Russia as of this morning.
Okay.
Period. So he's cut sanctions. Peter, I can never pronounce his last name. The foreign minister of Hungary announced over the weekend that the United States had lifted sanctions against Russia to help them in relation to them building their nuclear power plant that Rosatom is building for them. And then there was another one that came through this morning. There was another big one that came through this morning. So the Kellogg is a neocon. He's sent out there by Trump to counter program as to what he actually wants done. You see any of this stuff out of British papers, he's like the John Bolton of this administration. Okay,
Right.
he's sent out there to to scare people. The British media will lap this shit up all day, every day, and try to create narratives that aren't true. Trump will even allow that to go on because it works to his strategic ambiguity that he likes to play so game that he likes to play so well, and he's very good at it. What matters is what he does, not what he says he's going to do.
It's fair enough.
And he's cutting sanctions on Russia. Now, interestingly, when I was in Calgary, I had someone come up to me, I had a patron fly up to Calgary simply for the event to tell me, because he's worked in the oil and gas sector, and he was in Houston. Normally he's like on the other side of the world, but he was in Houston for a meeting. He's like, I can make it up there. Flew up to Calgary to tell me one thing and one thing only. And I've said this to my patrons before, and then I got it corroborated by Martin Armstrong, which is that Trump was targeting, Trump and Putin had targeted July 1st as the lifting of sanctions, the beginning of the process to start lifting sanctions on Russia. And I asked Marty about that. And now that it's June 30th, I can say, yeah. And when I asked Marty about it, he said, yep, been hearing the same thing. So it's where we are. We're seeing it happen, play out in real time. Again, I'm not saying these things because I'm so wise and insouciant this and everything else. When you do good work, folks, people come to you and want to give you real information. This is what I found over the last couple of years. Okay. Yeah. And I also get a bunch of crap that comes my way as well. I have people blowing smoke up my ass on one day, and I have people giving me real information on the next day. I'm not always sure what to make of any of it. And the best of what I do is present as much of it as I can with as many caveats as possible for you to think about and for you to go and look and to find whether or not that tracks with what you think you're seeing or not. Or when it comes to pass and it's correct, well, throw another dollar in the Tom Luongo's right jar. And then we move on to the next thing. And eventually maybe there'll be enough money in there that we can actually, I don't know, go to dinner and have a good time or buy a round of drinks or some shit and be done with it. It's not important. Literally, no, seriously, like I make that joke. It is a joke, by the way, but I make that joke because it comes out of my community. They do this. Like my patrons had this on the Slack community. They're like, oh, throw another dollar in the Tom's right jar. I'm like, sorry, I didn't mean to, but sometimes I make, sometimes the inferences happen, and they're just, sometimes like you can flip a coin. I could be wrong about this shit, but like, if you've got a good model for who the people are, what their incentives are, what they're trying to accomplish, it really isn't that hard to like start to decode things. The problem is we're bombarded with obvious chum on a daily basis by people who are, telling us that, black is white. Reality is that the United States is in far better shape than people wanted to believe. And we've all been kind of gaslit, especially in the precious metals community and the hard money community for a long, long time, that the US was like on the verge of collapse. And I ask a lot of people simply, and I've been asking it all for the last couple of years, who told you that? Why do you think you know that? I just want to know. Because when you really start to ask yourself that question and honestly ask yourself that question, maybe you get the answer. It might not have been the answer you wanted, but it's certainly the answer. We're closer to the truth than you wanted to admit. And once you let go of some of your old prejudices about what you think, how you think the world operates, you can get to something closer to the truth. I've had to do it myself over the years. I'm not sitting here in this state today saying this is what I've always been this way since I first read an article of Lou Rockwell back in 1999. Like, no, fuck, I've been all over the map. I've been all the way down the rabbit hole that the gold market is fake and gay, to all the way to and to the other side and back again. And this is where I am. All of these assets are tools to be used for specific agendas by people who want to maintain power, like it or not. At the end of the day, folks, it's just commies. I've been saying it for a long time. I'm going to say it again. It's just commies. It really is just commies. And once we're done, getting past that, like, oh, look, another commie. And then, And the worst part about it is that there's so many people out there that are either unwitting or witting intelligence assets, blowing smoke up our ass and gaslighting us that we don't know whether we're up or down. And the only thing I ask anybody to do is to say, okay, fine. You think I'm crazy? You think I'm one of the gaslighters? Great. Prove me wrong. I'm happy to have you do it. I want to be wrong so that I can then go, yep, I was wrong. Now this is why. And then we can go on. But, you know, that's all we can do. We're working with fungible data. This isn't science, folks. Like, I wish it was. It's a lot easier. I can just like run the Gibbs free energy equation on the friggin' global economy and go, this is what it's going to look like. Got news for you. Don't work that way.
Look at him going Gibbs free energy equation after silver, not targets, but talk. And Tom, I'm looking over there. I think the Tom was right jar. I see a couple of 20s in there from the pivot call the last couple of years. And if we get that 50 basis point cut in July, I think you might have enough for the fretless 5-string bass and dinner. So, Tom, I will stuff my silly telegraph. I don't know how they got me on their email list, but unfortunately, I just skim and mostly delete those. Although people can get better coverage, especially if you're enjoying today's show. I think better coverage. I don't know if you still like the Telegraph, go read it. And here I see you had Vince Lancy, and as I'm looking at this, we have a guy in our audience named Jake who loves his pizza. I'll bet he's probably listened to this 3 times already, and now that I'm mentioning it, he's rest of his day is mapped out listening to it again. Obviously, Vince does our morning show, so a lot of fans in our audience here, and really great to hear those conversations with you and him. I was really excited to hear that conversation with you and Martin Armstrong. I'm like, geez, I got to hear what these two guys, how they reconcile the things they're seeing. So can be found at tomluongo.me. And I am quite glad to be a patron because that's how I was notified earlier this morning. Oh, we might have a rate cut on the way. And anything else you'd just like to highlight on your fantastic site, which I'm sure grateful that you put together? Even if you look like you're going to kill someone in that profile picture.
Oh God, it's so no. I mean,
that's what you do if they don't put something in the Tom was right jar. If you get to 50 bases,
no, you owe like you owe. Yeah, exactly. Sorry, I'm like I don't know. I'm terrible at taking pictures. Let's just put it that way. That was the best one that the poor photographer got that day, which was a while ago. But yeah, there you go. I mean, it is what it is. Like I this is what we do, what Dexter White and I do every month, and we do it on a regular basis. And most of the stuff goes out through Patreon now, and the blog is really a repository just of the publicly available stuff. I haven't written an article publicly, for just for public consumption in so long. But I'll be honest with you, like it's because guys like you are willing to like have me on their show, and I can get the stuff out into the world that way. And I don't need to, I don't have to, I can then spend more time constructing better work for the paid patrons. I really do think that the newsletter has improved dramatically the less that I write privately or publicly, but salt at the taste. So.
Yeah, well, we also need to, and on behalf of the other Gold Goats and Guns subscribers, I have already requested a video of Tommy on his drum kit, which I got a little look at today. He went Mike Portnoy on that bad boy, and I think
no.
Well, you got
more
the
like
kit. Maybe you're not
more like Jerome Augustiniak
from
from friggin' 10,000 Maniacs at best. I'm happy to show up. I'm happy to show up and like to stay on beat and not fuck up. Like I'm just happy. I'm happy to just show up. So.
Well, I'm happy you showed up today, and I'm grateful for all that you do and giving a lot of good information out there. So I will show that site one more time. And I might add that the link is in the description field below. And Tom, as I learned, if we actually point there, according to the YouTube experts, that makes it more likely that people will click. So they're pointing down in the description field. So if Tom does release a drum video, you'll get that too. But in all seriousness, Tom, it is nice where, especially like depending on what's going on, where if I see this Telegraph report or Israel and Iran are shooting missiles again, it's nice. I don't get to every single one, but like, especially when there's an event, and it's like, yes, I would like to hear what Tom is seeing because you go a lot deeper into these things than I've been able to find elsewhere. And I'll throw another 20 in the Tom is right jar. And in fact, if I'll tell you what, I will throw a 1 year subscription to the Patreon. So if anyone would like a chance to win that, go share this interview, tag me and Tom on Twitter, and we'll pick a winner. Tom, I'd be happy to pay you for that and give a nice little something to our audience. So we'll see what happens in the next couple months. But sure appreciate everything, and thank you for joining us here as always, Tom.
Thank you, Chris. And that's really lovely. You didn't have to do that. I will say in closing, the last thing is, I don't know about you guys, but I was impressed with how Trump handled Israel-Iran in a way that was I didn't expect, and I'm happy to have been wrong. But he handled it brilliantly. He handled it the way I hoped he could handle it, which is to get it over and done with and call everybody's bluff in a very short period of time. I didn't have very high hopes for that. I had very low order probability on that. And I'm happy to have been happy to pull 20 out of the Thomas Wright jar and go, buy someone else a drink. So let's just leave it there. Because, at the end of the day, what we really should be worried about here is, or we should be hoping for, is that we can tie up all these geopolitical conflicts, which at the end of the day, if you really look at them hard, are mostly fake and created by some external actor. And once you understand who that external actor is, and you can act against them and you can neuter them with the right leverage, with the right actions at the right time, we can change the world very quickly. And Trump is proving far more adept at that than I gave him credit for. And so that's great. That's all to the better. And then let's move on from there. And if that means in the end that we don't get, $30,000 gold and all the rest of it, well, okay. Wouldn't you rather live in a world that's far more peaceful than having 30 grand worth of, having your gold worth, hyperinflationary money? Like, is that what you really want? Like, you got to really ask yourself that question. I don't want to live in that world. I'll hedge for it. And whatnot, but I won't. But I'm not hoping that it happens, right? And so it's the same thing with all these other things. So that's ultimately, I think that's my final thesis, my final statement on that. So, Chris, thanks for the great chat, and we'll do it again soon. Okay.
Well said, and thank you, my friend. And yeah, with all the stuff going on, we'll catch up in a couple months and see what's happened from there. And I will look forward, and I'm going to come over and play that 5-string bass after we get that July rate cut. So
all you got to do is give me 48 hours notice, dude, that you're on your way up by 75 or on your way up the turn.
Better be careful. I might be showing up before you know it.
I'm on vacation between the 3rd and the 17th. Don't show up then. Other July 3rd to the 17th. Otherwise, just let me know. You have my number. You know what to do.
Will do, my friend.
We'll talk soon. All right, man.
Talk to you soon, buddy. Well, thank you, Tom. Sure was fun having him on there. Always one of my favorite guests to talk to. I think some of you know that I got a chance to meet up with him in person last October. And exactly the same as you see on TV. And I really enjoyed Tom. A lot of interesting things that he digs into. And again, yesterday he talked a bit about how he's expecting a 50 basis point rate cut in July from the Fed. Obviously different than what the markets are pricing in right now, although I will say he was right when everybody else was wrong, myself included, about the Fed going to pivot right away a couple of years ago. And either case, hope you enjoyed that. Thank you for being here. Appreciate you spending part of your day with us. And before we wrap up, would also like to thank First Majestic Silver, one of the companies who helps makes this show possible, and obviously also has a large exposure to silver, especially following their deal with Gatos Silver last year, which gave them record free cash flow in the first quarter. About a month away from second quarter earnings, but obviously with the silver rally and their increased exposure, will be fun to see how those numbers come out. They have also had some exploration success, as I had mentioned, this was about a month ago, but they had a second gold silver discovery within the last year at Santa Elena, and they've also expanded the high-grade mineralization at Navidad. And I would mention that if anyone is coming down to the Rick Rule Symposium next week, which is July 7th through the 11th in Boca Raton, Florida, I will be there, Keith will be there, and I'll be doing an interview with him. And certainly if you have any First Majestic questions, that's a great place to check in with people. This is also available online, so I will leave the link to the Rick Rule Symposium in the description field below. But again, if you ever wanted to meet Keith, he will be there, and if you need help getting in touch with him, I'd be happy to make an introduction for anyone who is coming by there. But certainly a lot of progress that they've made. Obviously, wasn't the easiest couple of years a few years ago, although certainly with the current pricing and the change in the composition of the company, helping out quite a bit, and we'll find out how those second quarter numbers look soon enough. But with that said, going to wrap up for now. And just in case you missed part one of our interview with Tom, where he talked about why he thinks the Fed is going to surprise people with a 50 basis point cut in July, well, that one is coming your way now.